Let's go. 9:30. Let's see what you want to do. The gang is here. Price could shoot up here. I'll look for sells. Bell's trade looking nice. How to take these sells right here. 50-point stop loss. Just got tapped into this trade. Let's see. Timer's on. You blew one account, just get another one, bro. It's all good. Might get stopped out of this, John. Bro, this dude traded like a million times. 10 minutes in, still nothing. Took 14 minutes, but TP1 hit. Blowing minds. I'm in this trade way too long. Come on, drop. Look at that. 28 minutes for TP2 to get hit. TP hit. He said, man, joining up the VIP is probably the best decision I ever made with y'all. Come on. Shout out to Dustin, bro. VIP lit. Yo. There was no volume on the live session. No volume. My mic audio was gone. I'm really sorry. I should have checked. Usually I do. Today I didn't. So, just hopped out the call with the VIP. As you guys seen, TP2 hit. But it did take 28 minutes. It was an emotional roller coaster for me. I don't know. When trades take too long to hit, they send me up and down an emotional roller coaster that I don't like to be a part of. I want to just be in and out. So, but I'm understanding, some trades are not going to hit TP in 10 minutes, right? It's unrealistic. It's really unrealistic. And I understand that, I just got to keep building my patience. With my discipline, I can just, keep doing that same patience practicing. But as I said, man, it is what it is. It's a part of the learning process. As I see that the markets is kind of slowing down, like earlier this month, late last month, trades was popping off just like bullets, bro. But now, I see that it's not like that. So I gotta take my time with what I'm doing in the markets because it's not as fast moving anymore. It's kind of slowing down. My trades are taking a little longer to hit TP, so I gotta, But as usual, I gotta put you on a game. I gotta show you how I make profits in the market. So without further ado, we're gonna do a breakdown video right now. Let's go. Let's start the breakdown session. As I told you guys in a video from before, I will not be doing the in-depth details on how I break down the charts. I just don't feel like I have enough time to do that every single time I hit TP. I will do more often if you guys request it. I will. But for right now, high level view, how I got the trade to hit. So we're going to start on the 1 hour charts. I always get asked, you don't look at the 4 hour charts. You don't look at the daily charts. You don't look at the weekly charts. No, I don't. I don't need to. I don't need to. I'm a scalper / intraday trader. As you guys can see, I don't be in a trade for that long. I don't even want to be in a trade more than 30 minutes, bro. So I'm not going to look at the daily charts. I mean, all the information I need to know about the day exists on the 1 hour charts, and I just go straight from there. And then I drop down to the 15-minute, 1-minute entries. Simple. So on the 1 hour charts, right? I wanted to mark up my areas of interest. So I had a couple of areas of interest. This one being the first one. It's my areas of interest is like a zone. It's like a area that I want price to come to. Then I'll be making a decision. And I had another one like right here. This was a big area of interest. I'm not gonna lie to you. Pretty massive size, but that's all I had, right? I had nothing else. It's really all I had. So I had to drop down to the 15-minute time frame. But the thing is, I didn't see anything to mark up. I didn't have no specific areas of interest on the 15-minute time frame. As you can see, this is structure, but it's just not worth it. The structure is really not there for me in this area, in this small area to mark out anything. I didn't want to be caught up in the noise of the 15-minute time frame when there's really nothing significant that was happening. So I just straight jumped to the 1-minute charts to get into a trade. So let's fast forward the clips to about 9:30, which is 2 minutes. Boom. I mean, two taps. Boom. So this is 9:29 right here. And it's pretty, this is when the opening bells hit. This is when markets start to move. But as you can see, this area of interest right here, if we look back on the 1 hour charts, I'm just gonna go to, you guys see what happens already, but let's go to the 1 hour charts. When price came up here the last time, right? This is the highest price came to in this structure. I always like to draw structure, right? Because structure is how the market flows. The market moves in cycles of higher highs, higher lows, lower highs, lower lows. It's all structure. If you can understand structure, you understand the markets. So as you can see, markets had a bullish structure, right? Price started from this low, created this high, created a new lower high, created a new higher high, created a new lower high, then created a new higher high. When price came here, you could see price dropped significantly when price came here, right? Price dropped significantly. What happened again when price came here? It pushed up a little bit, but it dropped again pretty significantly, right? Would you guys agree? Yes. Price dropped again significantly. So now when price, well, this is the candle, this is that 930 candle, but price is already up here. Like if we go back to the 930 candle, let me just bar replay tool one more time, then I'll skip back to it again. This is what price looks like when I jumped in the markets at 9 o'clock. I see when price came here, it dropped. That means what? Sellers are here. They're in this area. When price gets up here, this is where the sellers took over because they made a massive drop in price. When price came up here at 45, around the 45,157 to 45,886 area, price drop. So now we here again. It's 9 o'clock and we're back in the area where we had a massive drop. We already grabbed liquidity from the highs. You can see if you look left, people have their stop losses above the highs before the drop, right? So people might still have their stop losses. What market did came, collected the orders. It collected the stop losses from over here. So grab liquidity. So I'm like, okay, markets is in that area of interest where last time it dropped crazy. It grabbed liquidity from the highs. Okay, we can possibly see another drop. So now we go back to the 1 minute to where, let me fast forward to the 930 candle right before 930. So now we are back in that area of interest where markets dropped dramatically. I'm expecting what? The same thing, because I know sellers are in that area. We just grabbed liquidity, so sellers could still be back here because the buyers had no more momentum to keep going higher. Now we're back under the area of interest. I'm going to use this area of interest as a ceiling, as a resistance area. So I'm a support and resistance trader, supply and demand. They're really the same thing. When people say there's something else, they're really the same thing. Support and resistance, supply and demand, same thing. So I'm using this area as a ceiling that I want price to go into, turn around, and drop. So now let's fast forward the clips a little bit. This is the 930 candle. Boom. Look at that 930 candle. Look how it looks. Do you see how it opened? Do you see how it opened and closed? Do you see all of that in the wick? Look at the wick. So there's a lot of key things to focus on. One being structure, because structure tells everything about the markets. The structure is how markets flow. The markets flow in orders of higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, lower highs, lower lows. So uptrend, higher highs, higher lows. Downtrend, lower highs, lower lows. It's all structured. That's how the market moves. That's how the market operates. Structure. The next thing you want to pay attention to is the wicks, how candles close, the momentum behind a candle. If a candle is full like this, you can see there's a lot of momentum in this. There's a lot of buying pressure in this candle. But when a candle like this that went all the way up here and then shot back down and closed bearish with this big wick at the top, what does that show us? A lot of sellers came in the market. There was a lot of selling pressure. The buyers didn't have strength, and it's a confluence. So this is the 1 hour area of interest where we know the sellers won the last time, and now prices went back in that area of interest for that 930 open, and we can see this wick on this 1 minute candle that shows us that the sellers are still there. That's an additional confluence to take the trade. Now, how do I get into trades? Right? I want to wait for the candle closure below the last bullish engulfing candle or bearish engulfing candle to go in the area of interest. So something like this. This is the last bullish engulfing candle to go in there. A lot of momentum, a lot of buying pressure to go in there. 9:30 open up, boom. Sellers are back in. They're here. Now what I'm waiting for price to go below this candle, close. Once it closes, I want to retest it, take it short. That's it. That looked a little bit ugly. Let's do it again. Retest, take it short. Just like that. That's all I'm waiting for. Simple, simple. All it is just going from the higher view, looking at the structure of the market, identifying your areas of interest, go down to the 1 minute time frame, look at the momentum, look at how price reacts in areas of interest, wait for the candles to start to show that the buyers or the sellers are winning in that area of interest. You wait for the candle to break and close below that last bullish or bearish engulfing candle, and then you take the shorts with after the retest. So I'm going to mark it up. This exact trade I took. And you're going to see. Look at this next candle. This next candle. Look at this. Boom. What does this candle tell you? Come on now. Look, look, look. What does this candle tell you? Look how big this candle is in comparison to all the candles to the left. Look how it engulfed all of these candles to the left. What does this candle show you? It shows you that the sellers have stepped in the market and they're strong. That's a lot of selling pressure from the area of interest. Come on, it all comes together from the higher time frame to the lower time frame. They all go in confluence with each other and they line up at the end. Look at this. Now I see that, sellers has stepped in, bearish engulfing candle, covered all of the candles to the left. I want to get in on what? The retest. And then we get in for the drop. So something like that. That's what I'm waiting for. That's all I'm waiting for. So you're going to see the next candle. Boom. Next candle. What happened? We got the retest. Boom. I'm in. I'm in at 9:32. Mind you, this trade took an awful long time to hit TP. I'm not going to lie to you. It took at least like 10 minutes to hit TP1. But we'll digress. I still made money today. Who cares? Look, it didn't take. It took till what candle? Yep, it took till 9:47. So from 9:32 to 9:47. So basically like 15 minutes for TP1 to get hit. That's when I moved my stop loss to break even, because I want to cover myself. Have no risk on the table. I could now rest easy, right? For TP2 to get hit, oh my God, it was on like another 15 minutes, bro. Look at this. Look at that. It took till 10:01. So really from 9:32 to 10:01, which is about 29 minutes. Really, it took like 28 minutes to hit TP2 for me to make $500 today. It took a little while, but it happened nonetheless. So I hope you understand from the top down how it made sense. Like how I mark out structure, mark out my area of interest, drop down to a lower time frame, wait to see how price reacts in these area of interest, wait for the confluence with the bearish or engulfing candle or the candle to close below that last candle that touched the area of interest. Boom, let's go. For me, anything can happen in the market. I don't worry myself, am I going to be right or not? That doesn't matter. I'm doing everything that I'm supposed to do according to my edge, with all of the confluences lining up to take this trade. So now that I'm in the trade, it is what it is. I'm resting easy. What I got to stress for? I'm resting easy, man. Let the trade go. It is what it is. You feel me? You never know if you're going to be right all the time. But let's get out of here, man. Let's go on a walk real quick. So it is Friday, and for the week, I'm break even. So I started off the week up on the account like $1,000. I think, yeah, it's just $1,000 I had left on the account when I started the week, and ending the week, it's still at $1,000. Yep. Congratulations to me, man. I broke even. That's not a bad week, man. A break even week, that's a W. And I followed my rules every day. So what? That's a W. I'm not mad at it. And we just keep doing what we're doing, keep going. As I said, man, I'm not mad at the results. I'm not mad at that. But the thing about it is, I had one break-even day on Monday. Tuesday was it Tuesday? Tuesday was an L. Wednesday I didn't trade because it was FOMC meeting minutes. Thursday was an L, and I won on Friday. So that just means what? I'm risk managed, bro. You feel me? I had 2 losing days, 1 W, made back all the profits. You feel me? Like it's all about risk management at the end of the day, bro. We're professional risk managers. You got to manage your risk in the markets. Take the trade, take the risk. You got to take the risk, but you got to manage it. You feel me? As I tell you guys, cut losers short, let runners run. Let the runners run to hit TP. If you see that your trade is not working out, it's creating structure in the direction opposite to the trade that you're in. If you're going longs and you can see structures going downwards to your stop loss, cut that trade short. Why are you still in it? You feel me? It's cool. Like, you're wrong. It's okay to be wrong, especially in trading. It's okay to be wrong because everybody's wrong at some point. You'll never always be right. You feel me? So just cut the losers short. It's okay. I cut my losers short because I want to preserve my capital. So when I do take a W, it'll make back all the losers. You feel me? That one trade on Tuesday, or was it Monday? No, it was Tuesday. Super confident on Tuesday. Super confident in the trade idea, trade setup. I sized up, took a L. Oh, boom, punched me. Took a L. It's all right. It's all right. I think I was down like $380 that day. Not bad. Not bad, right? The trade from yesterday, I risked about 300, another 300 for that trade, but I cut my losers short, so I only ended up losing like 100. So like 100 something, a little bit over 100, like 130, something like that, 120. But I cut it short, right? But today, I was risking 250 for a 500 TP. I let the trade hit TP. Like, that's all. It's all about risk management, proper risk management, bro. That's all I could keep preaching that day in, day out, because that's what it comes down to. If you can manage your risk properly, you can stay in the game long term. On this account, I had this account for 4 months now. 4 months. The other account I had for like 6 months. Blew that one. It's cool. I had multiple payouts for me. I don't really care. Even this account, multiple payouts. I'm trying to get another one. There's a lot of stuff going on right now in the back end that you guys don't know about that I'm trying to fix, but you guys don't fully know about it, which is okay. I don't expect you to know all of my business, but trying to get another payout from this one. Possibly I can get another payout by next week. Not forcing it, not putting pressure on it. All I'm doing is follow my rules, staying disciplined, risk managing properly, and live to trade another day. So, all together, I'm proud of my week. I journaled every single day. I showed up and I was disciplined every day. The day I said I wasn't going to trade because of NFP, was it NFP or FOMC meeting minutes? I didn't trade. Like, this was a W week. I was disciplined every day. As far as trading goes, disciplined every single day. And that's a what? It's a W. So just keep practicing good discipline. Keep practicing doing the right things. If you could do more of the right things and less of the wrong things, you will inevitably keep winning. You would inevitably get better. Because if you're doing less of the bad things and more of the good things, then the more of the good thing is going to get you more to where you want to be. It just makes sense. It just makes sense. So I just practice, stop doing dumb stuff on the chart. Stop doing the stuff I know I'm not supposed to do. That's it. That's all I really do. I try to focus on the things that I'm supposed to do and let everything else, the uncontrollables, let them do what they want to do. I can only control myself, and I can only control what I do, which is risk management, how much trades I take, when I trade. You know what I'm saying? controlling myself after a loss or a win or whatever. I can control those factors, and that's me. Anything after that, like does TP hit, does stop loss hit, does I can't control that. I can't control none of that. So I just control the controllables and I keep moving forward. I'm outside with my guy Milo, man, taking my usual walk. Because I need a walk, man. I need a walk every day because I be a little, I'm not stressed out today. I'm not usually ever stressed out, to be honest, but it's just a nice walk just to get your mind right, because it's all about sharpening your mind. Trading is up here. It's nowhere else. Trading doesn't exist nowhere else besides up here. This is where your edge comes from. Your best edge is in your mind. So if you can keep your mind sharp, keep your mind dialed in, pristine, precise, you'll be all right. You'll be all right. Stay locked in, though. I'm so sorry that I had no volume on the video today. Like, I really killed the video today. I really did. I really did a good job of trading today. And I had no audio and the chat was funny today. It is what it is. Listen, I'll do better next week. I will. Or next video. Not next video, because I have a whole bunch of videos. Next week, I'll do better. I'm going to see you then. Till next time. Let's go.